First Brands Auto was kind of the first, let's say, shot across the bow in September that let the markets onto this whole non-depository financial institution transactions. And it was a factoring fiasco, but there was an intermediary, and there was $10 billion in liabilities. They filed bankruptcy in September 2025. As we start to see more of this kind of stuff come to the surface, fraud, mismanagement, sloppy underwriting, I'm going to share with you right now, sloppy auditing. Months before the darn thing collapses, their audit showed all good. So we're going to start seeing a lot more of this where everybody somehow fell in line, right? And you can all, I'm sure, surmise how that happens, right? But the skeletons are able to be kept in the closet until they aren't, and everything looks good until it isn't. We're starting to see some cracks in the market right now with AI and the valuations. I'm going to get to that in a couple other videos here, probably later on today, as we see the markets open. But I wanted to share this story with you because it's going to be a common theme. I think you're going to see, folks, as these private credit loan transactions start blowing up. At a Wall Street Journal a couple days ago, BDO's First Brands audit painted a healthy picture months before the collapse. The audit of auto parts supplier didn't show billions of dollars of off-balance sheet debt and unpaid balances owed to financing providers. Okay? Again, off-balance sheet debt outside of the main banking system. Before I jump in, as I always humbly ask, please subscribe if you're not subscribed to the channel so we can keep growing the community. I do appreciate you guys very much. So does the auditor of beleaguered auto parts giant First Brands signed off on its financials this year, months before the emergence of an accounting scandal that sent the company into bankruptcy and triggered a criminal investigation. And now I see something in the last day or so that I guess the board, it's either the board or the bankruptcy trustee handling First Brands is suing or about to sue the CEO or former CEO of the company, saying that he absconded with millions and millions of dollars. Again, we're going to start seeing this common theme. It's never enough. The greed factor takes over. So documents that have emerged following First Brands collapse shows substantial discrepancies between the financial information and BDO USA validated, that BDO USA validated, and the financial picture that is now coming into focus. It says BDO's audit of First Brands 2024 financials reviewed by Wall Street Journal Pro Bankruptcy, AI and CFO Journal didn't reveal the billions of dollars of off-balance sheet debt and unpaid balances owed to financing providers that weighed on the companies that descended in Chapter 11. The accounting industry's code of ethics, this is a quote, okay? It's always the code of ethics. Quote, the accounting industry's code of ethics and our client agreement strictly prohibit BDO from discussing any aspect of our audit work for any client. A BDO spokesman said, no one has suggested that BDO engaged in any inappropriate conduct or otherwise asserted any form of claim against the firm in connection with First Brands' decision to seek a bankruptcy reorganization. Auditors look, it says, at off-balance sheet obligations to ensure the company's in compliance with accounting rules and assess, determine the financial risk. Auditors also assess whether a company is able to remain in business for the next 12 months and provide such a warning in their annual reports. BDO wasn't hired, it says, to audit the entities tied to much of the First Brands off-balance sheet financing. People familiar with the matter said. So let me ask you this rhetorically. If you guys are accountants, if you're certified fraud examiners or in this field, how is it that you're able to do a partial audit? Are you trying to pigeonhole it for a certain audience or shareholders or for more potential lenders? But again, they didn't audit that much of the off-balance sheet financing, that's where all the bad stuff obviously was, laying beneath the surface with this company. Okay, so again, I question why they wouldn't have audited off-balance sheet financing when that was the primary source of financing that this company obtained. A BDO executive said the firms didn't audit any of the related parties identified in the First Brand's bankruptcy filings. Auditing doesn't tell a complete picture of a company, said Ben Laurie, an associate professor of accounting at the University of California, Irvine. There's no way around it. The auditing process is not perfect at all, and the cost at times is fraud. Okay. First Brands filed for bankruptcy last month, okay, after the market lost confidence in its financial disclosures, okay, which had to do with all of the NDFI obligations and questionable, okay, collateral. And it said First Brands acknowledged in court papers that about $2 billion of investors' money is unaccounted for. Chief Executive Patrick James has resigned. Now I think he's being sued or about to be sued, or that's out there. And the Justice Department is conducting a criminal probe. As First Brand spiraled, restructuring advisors hired by the company discovered irregularities associated with its factoring arrangements, a type of short-term financing in which the company would provide products to customers on delayed payment terms. Where we heard that before, guys, with Affirm and Klarna, all this buy now, pay later nonsense that, by the way, New York life insurance is funneling billions of dollars into. Go back and look at my video from a few days ago. Okay, and then they sell the unpaid invoices known as accounts receivable to financial institutions. Okay. During 2024 and 2023, the company had factoring agreements with financial institutions without recourse. Okay, which means, not legal advice, but without recourse means that you can only look to underlying collateral for satisfaction of the debt. If the collateral is illusory or doesn't exist, or it's been rehypothecated, you're stuck. Okay, you can't go after personal guarantors and other business, let's say, other avenues for collection against the company. So it's noted that First Brands recognized $195 million of accounts receivable factoring related expenses, but didn't detail the amount of outstanding obligations stemming from its factoring arrangements, right? The obligations, they showed it as an asset, okay, for purposes to make their books look good, but they did not disclose the amount of obligations stemming from their factoring arrangements, which means how many, creditors were looking to satisfy their debt against the same collateral, okay? So I don't want to go too long with the story. I just wanted to get the point out there that we're going to start seeing more and more, I think, from my perspective. You're going to see the auditors coming out, running for the hills, saying, well, we can't talk about it, but it wasn't part of the scope of our work. You're going to start seeing potentially the rating agencies, some of them are more well-known than others, come out and say, well, we did our best. Our scope didn't cover that. Or we were, or let's say the content and and the credibility of our rating was based upon information we got from the company, and they withheld information. So you've always got this, let's say, putting the blame on somebody else. It's never anybody's fault for a collapse. But we're starting to see some cracks, not just with First Brands, Tricolor, some of the regional banks last week, but we have some other big companies right now taking some serious stock hits. And let's see how this unfolds. Appreciate you guys watching. If you enjoy the content, leave me a like. If you're not subscribed, please subscribe to the channel. Leave your thoughts and comments. With that being said, I will talk to all of you soon. Bye.